So there's really, I think a whole team of value investors that are poised to await these more opportunities that might come through with policy normalization. Do you see that happening, and where do you see the opportunities in the market right now?
Well, first of all, we do think that the Fed is going to follow through on their plans to taper, and we do think that that will lead to some interest rate increases next year, perhaps as many as two. But obviously, they'll remain very data dependent, and they'll be watching very carefully how the inflation trajectory starts to hopefully modulate. We've actually thought that this would be a good opportunity for value investors for a little while, but I think one of the things that investors continue to be focused on is the visibility of earnings. And there's still a pretty cloudy picture there. We basically are looking to diversify our bets right now because we do think that there are different opportunities that on a relative valuation basis look pretty attractive here.
So when it comes to the inflation piece, right, and the supply chain issues, what are you looking for in companies? Are these companies that can, at least in the medium and perhaps longer term, really pass through costs to their customers?
Well, there are a lot of things. One of the factors in the market that's been sort of underappreciated over the last several years is quality. Those businesses that have good business models, that have good, stable brands, that have good consumer acceptance, and those are the businesses that oftentimes can pass along some of those incremental costs to their clients. We're also looking for changes in consumer trends. So we do think that we're going to see a little bit more of an opportunity in places like real estate, where investors have been a little bit more shy because of concerns about what's going on in those marketplaces. And we also do see continued growth in places like technology and healthcare.
To your point, we continue to see record margin expansion right now, as this GTV chart on the Bloomberg shows, despite, of course, the supply chain disruptions that we continue to see. And yet in your notes, I see that you've reduced your allocation to large cap U.S. stocks. So why and where have you redeployed that capital?
Well, first of all, we've reduced it from a very large overweight. So earlier this year, our favored position was large cap U.S. stocks because we did think that the U.S. was handling the COVID pandemic better than many other countries. And certainly from a growth standpoint, that's where a lot of the growth was happening. So we pared that back, and we're now looking at more diversified opportunities, looking at small caps, for example, where we just think that there's going to be more opportunity for things like financials. We're also looking at Europe increasingly. We think the relative valuations there are more attractive. And going back to your earlier comment about as rates potentially go up, value should do better, and especially if we continue to see economic expansion, which we're also expecting in 2022.
With these diverging central bank actions, especially when it comes to what the Fed is doing and perhaps what the PBOC is not doing, we're not seeing more easing or any more policies to support the economy there. What are your expectations in terms of where you can find more opportunities? Would you venture into Asia and perhaps the regulatory concerns in China, or is Europe and the U.S. still your best bets?
Well, Europe and the U.S. are our best bets from a near to intermediate term standpoint, because we just think that there's going to be better participation in the global economic recovery there. Consumers are very flush with cash. They're continuing to get better wage growth as well. So we just see the U.S. and Europe as being the anchor for global growth. But don't count out China. We, from a longer term perspective, we think that some of the recent re-rating there makes the entry point pretty attractive. But we try to be a little bit more diversified in our exposure there.